Hello, everyone. This is Nick Kyprianou, President and CEO of RiverRock Mortgage Investment Corporation. I'm going to give a recap of the first half of 2021 of this year. So far this year, the market started off obviously very hot, and there was a lot of activity in the marketplace at the first part of the year. It has settled down now. Listings have dropped. However, the positive sign is that values have stabilized. We're not seeing the increase in values that we were, but we're not seeing a decrease either in most markets. We found here at RiverRock that there was a little bit of a irrational exuberance in the Durham region, that Ajax, Pickering, Oshawa, Bowmanville area. And we found that was due to that particular area was undervalued last year. And then when the market started to heat up, there was a mass influx of home buyers that went into that area, and then it went from being undervalued to overvalued because so many people rushed to that area for what they perceived as an opportunity. So we have seen a slight back off of values in that particular area, but we are seeing that stabilizing out now. We identified that very early on at the beginning of the year, and we kind of backed off from that area. But now we're seeing things kind of leveling off in a more balanced market, which we like to lend in. For the balance of the year, we see this kind of trend continuing where values have just stabilized. Next year, we'll see, I believe that we'll start to see some values start to creep up a bit, anywhere in the 2 to 5% range, depending on the area. And this is partly because of the fact that, there is an undersupply of housing. There's predicting something like, or the government's hoping to have something like 400,000 new immigrants come into Canada in 2022. The vast majority of those people, something like 2/3, show up in the Southern Ontario area. So what that does is it puts more pressure on housing. Immigrants that are coming to Canada today are much different that came to Canada in the 50s and 60s. The people that come today have a lot of education, and they also come with money. So they get good paying jobs, and they hit the market relatively quickly to do that. So that does put some pressure on housing. So we're staying disciplined to our model. We've had a good growth this year. We feel like that we've hit a tipping point in the mortgage broker, mortgage agent community, because we are, getting to look at a good volume of business. And like I said earlier, we're staying very disciplined to our model. We don't deviate. Like I always say, it's very easy to get the money out the door. It's not so easy to get it back. So it's a lot more work to get it back. So we're very disciplined. We have a kind of a zero loss philosophy. And since we started the company over 7.5 years ago, we've had zero losses. Our arrears are at historic lows. I think at the end of June, we were at 0.01% of arrears, and all of these will be resolved in most cases by the borrowers themselves, by either refinancing and paying us off or selling the home. There may be the odd one or two that we have to step in to take care of, but we're not worried on any of those transactions. So overall, we're always we never say the word just optimistic. We're always cautiously optimistic, because we just don't take a blanket view of the whole province. We look at the areas very closely, and we might be very optimistic about one area, but kind of a little more pessimistic about another. So we collect a lot of data on the various areas we lend in, and we tweak our model according to what we believe is happening in those areas. So going forward for the rest of this year and next year, we think we'll have steady growth. And we feel very comfortable where the market is right now and where it's going. So we will continue to, kind of stick to our knitting and move forward to that. As I mentioned in my year-end or mid-year letter to investors, we're going to be introducing leverage next month. We said in our offering memorandum right from day one that we could leverage up to 50% of the assets under administration. So we said we could leverage up to that, but the reality is we probably never get that high. You're probably looking at somewhere in the 30 to 40% range. And that would, be a fluctuating thing. But what this does is allow us to get the better quality applications and still maintain our target yield. That's what the leverage does for us, because the bank's given us a very favorable rate. So due to that, we're able to keep growing the business, maintain our target yield, and do high quality business that just misses the banks by an eyelash. So that's basically all I have to say at this point. If we see a shift in the marketplace or anything like that, we would do a letter to shareholders, letting them know that we see a change, or an off-cycle letter to shareholders to let them know that we had concerns or something like that. So I hope everybody's keeping safe and having an excellent year and a nice summer. And we look forward to reaching out to everyone once again to give an update. Thank you very much.